Welcome to another deal deep dive. This one for a property in Detroit, Michigan. I'm your host, Mitch Messer with Home Pride Properties, and we're going to walk through the numbers for this deal in some detail, and hopefully I will answer any questions you've got about the quality of this particular deal. This is 14350 Rutherford Street in Detroit, Michigan. This appears to us to be a buy and hold deal. From what we understand, this is a rental neighborhood, probably a B minus, C plus neighborhood. Nice, solid rental community, and the price range I think is what makes this appealing. So let's begin. We're estimating ARV of 58,000, give or take. When you've got properties this inexpensive, at least compared to what you'd see in Metro Atlanta, the ARVs, everything starts to compress, and so it's harder to be too exact with the ARV. Is it 58 or 59 or 60? Who knows for sure, but it's somewhere in that vicinity. The important thing is that our purchase price is less than that. It's 57,000. Which is 98% of this ARV. As I've said before in these deal deep dives, I like to see the purchase price obviously less than ARV. It makes me confident that if I had to dump the property for some reason immediately after purchasing it, I could do it without getting mauled, and this gives me a little bit of room, not as much as I could get, but again, in this price range, you're not going to get a huge discount. These are already fairly inexpensive properties. Because it's a cash deal, the down payment will be exactly the same as the purchase price. There is no financing being offered on this deal, and so we're going to do the analysis assuming it's a cash purchase. The property is currently occupied and is in great shape. So let's assume that any, and we're not aware of any repairs, but I don't like this estimated repairs to be zero, so we put 2,000 in there just to be polite, frankly. But I don't anticipate there being any repairs required right now, and obviously you'd verify that before you actually closed as part of the estoppel process. Closing costs, I'm assuming 1,000. It's probably overkill. It's probably about half that, but let's just assume that that's roughly speaking the worst case scenario. There are no finance points because this is a cash transaction. Fair market rent, and we'll talk in a separate segment about where we came up with the rents, but we estimate for a 3-bedroom, which this is, to be about $850. I think that's exactly what the residents are paying right now, so that's actual rent. This is not being offered currently as a lease purchase, and of course there is no debt service as it's structured. The insurance we've estimated at $540. The taxes came straight from the county website, $1,270, and then maintenance, vacancy, and management are using our approximations. I use 3/4 of a month's rent for maintenance. I use 1 month out of every 12 for vacancy, and management. I'm not assuming actually. This is actuals. The actual management is 9%, so $918 a year. So, taking those, you get an annual gross scheduled income of $10,200, which is just the $850 of fair market rent times 12. The total annual operating expenses are the sum of the insurance, the taxes, the maintenance, the vacancy, and the management of $4216, and of course there's no debt service, so that gives us a net operating income of $5985, which is the difference between the $10,200 and the $4216. So that's our NOI, and that also in this case is our cash flow, because there's no debt service to speak of, and we're assuming that any capital expenditures are incurred upfront as part of the estimated repairs, so that pre-tax cash flow is the same as the NOI. The cash on cash return, therefore, is the, well, let's just start with the cash flow. The cash flow of $499 is the $59.85 divided by 12 months. And the $997 is that same cash flow divided by the total months, the total amount of money that has to be invested in the deal, which in this case is the $57,000 in purchase price plus the $2,000 in repairs plus the $1,000 in closing costs, which works out to be exactly $60,000. So that's where you get the 9.97 annual cash on cash return, which looks to me to be a pretty darn good deal. Nearly $500 a month in positive cash flow, and about 10%, just under 10% cash on cash for a 60, effectively all in $60,000 investment. So there you have the numbers, and if you have an interest in this deal, if you keep watching, you'll see how to reach out to us and express your interest so that we can get you or your representatives inside. So we're attempting to determine the value of this property. This is 14350 Rutherford Street. This happens to be the Zillow page. I don't only rely on Zillow. I'd much rather get a list of recent sales, but let's at least see what we can derive from here. You'll see the Zestimate that they calculate is 52,000, which is interesting, but I'll typically take a little bit of a closer look on this page, and I like to go down to the neighborhood. I'm encouraged to see that it shows as very hot, although again, Zillow has been known to be off by a bit. This map shows my target property right in the middle there, and then it shows the properties around it. I believe the reds are sales, and the yellow dots are pending, and the reds are sold or completed sales. And I just want to get just an eyeball, or I guess this is a bird's eye view of what Zillow thinks other houses in this area are going for, because sometimes Zillow will penalize a particular property for no good reason, and so I want to be aware of what's kind of going on the street. So, and if I'm curious, I'll dive into each of these individual properties. I dove into some of these previously, so I'm not going to do too much of that now. I'll just note that the property next door, it somehow values at 58,000. Let's just take a quick peek at that one. So 14,366 Rutherford. Okay, it's 42.5. So that 42.25. So that would justify a higher valuation. It's got it at 58. So I'll buy that. Okay, so that's where that 59 came into play. Some of these are 45. Let's take a look at this 62,000. 1.5, smaller than ours, and for some reason it's giving it a $64,000 valuation. Interesting. So I didn't mean to do that. So it is, an argument could be made for this one being 64, one street over, even though it's smaller than ours, but it has a half bathroom bigger than ours, or more than ours. But I'm just looking for, could I at least make an argument for 57? As I've mentioned before, when I'm doing a buy and hold, I don't care so much about the ARV. My plan is not to flip this thing. There's not enough room to flip it at the price that I'm going to be getting it for. But I don't want to be stuck with something that I can't get rid of. But in this price range, a couple $1,000 either way makes a could make a big difference from a valuation standpoint. But I'm comfortable saying that something in the mid to high 50s is a reasonable valuation for this thing. And I'll just make sure I would do all my due diligence in advance and try to avoid there being any problem. But because there's already an existing tenant in this one, I would be a lot less concerned about this. I'm prepared to stand by a valuation of 58, maybe even as much as 60, but at least high 50s for this property as is. So this is the rentometer page for 14350 Rutherford Street. I've already entered in the address, the beds, the baths. I tried to go back just 3 months. I prefer not to go back too far, but there were not enough results for 3 months back, so I went 6 months back and used a search radius of 2 miles, looking just at houses and duplexes, and I get a median rent of $850, which tells me that half of the existing rents are above it, half are below it, and that's what I use in my calculations. You'll notice that it's less than the average. The average is higher, and so I'm pretty comfortable. And also, this is occupied, so I think that they are actually paying $850. So I do want to make sure that the amount that they're paying is not way off from the what the market rent is. If it's, well, I guess if it's below market rent, then there's an opportunity for me to raise it, and so it could be more valuable. But if it's way above, then I'm concerned that what happens if these folks move out? Am I going to get stuck with a property that's going to see a severe drop in cash flow because the existing rents are anomalous? And so in this case, $850 is exactly what it should be renting for, more or less. And so I'm feeling pretty good. If I scroll down, actually, if I click this view report, I believe it'll show me exactly. Yep, it'll show me exactly. It'll show me some trending data, as well as exactly which comps it's giving me and where are they look with respect to my house. So if I'm here, A and B look to be fairly close. But again, if I knew more about Detroit, I might know that Grand River Avenue is a major dividing line, and that the stuff over here is not really as critical as the stuff on the same side of the line as I am. I don't know that for sure. I'm just saying I'd want to understand more about the market if I had some concerns about that. But again, for the purposes of this analysis, $850 seems to be the number, and it happens to be what they're paying, so I'm good to go with that. Now, just for the record, I did run this assuming one bathroom. However, if I were going to buy this, since it has a full basement, I believe, or at least a partial basement, it has a basement, I would be looking really hard into whether there could be a bathroom added into that basement, because going from a 3.1 to a 3.2 completely changes the appeal of a rental house. It makes it a hardship and turns it in, well, it takes a hardship and turns it into a great place to stay for the long term. I don't know what will happen if I do that. Let's see if it gives us a different number. Yeah, well, this gives me an extra $50. Although interestingly enough, the average actually dips, but the median goes to 900. So there's some definite benefit to adding an extra bathroom if I could. If I could go to another full bathroom in the basement, then I would definitely look into doing that. But as it is, $850 as a median rent is not an unreasonable input. So if you've seen enough and you're ready to take positive steps towards grabbing this house for yourself, you'll just need to give me a call, because your next step is likely going to be to take a look at the inside of this property. My number here is 678-532-8870. Just give me a call and I'll be happy to schedule a walkthrough inspection for you. And I will give you the heads up that we generally require, if we have not done business with you before, that you submit proof of funds to us. You can email them to us at documents@home-pride.com, and once we have that on file, we can schedule your walkthrough. If the property is occupied, we can arrange for you to see it in a guided manner, and if the property is vacant, we can typically arrange for you to see it on your own. And we look forward to working with you and helping you buy this great home.